In this video, I'm going to tell you the differences between buying homes and give them for rent, also versus selling options or in the stock market. So I'm going to tell you why it doesn't make any sense rent a house or buying a house for rental, and I'm going to tell you why if you do this, if you sell options in the stock market, you can make way more and with way less risk. So I want to show you the screen. So for instance, for those who don't know me, I provide home repairs and maintenance. So I know what I'm doing, and I've been doing this for many years. So I know everything that is related about maintaining houses, repairing them, and everything that is involved. So here I'm going to tell you, I took a few notes so that way you know. For instance, if you have to for the lawn care and landscaping, depending on the type of the house that you have. If you have, maybe like a little house or something like that, you're going to spend easily between 1,200 and 2,500 a year. And also, at least once a year, you will have to do some maintenance to the HVAC, for the air condition and the heating system, at least 250, 500 a year, cleaning gutters, 120 to 50, I would say around 200 easily. Now, because we have a lot of inflation, maybe over the years it will be way more. Pest prevention, at least they have to fumigate around the house, so the way you don't have fleas, ants, and all of things. House keeping, house cleaning. At least I would recommend you, because I see, some landlords, they don't care about their houses and they let it run down and fall in pieces. But if you have at least one person going at least once a year or every twice a year or something like that, so that way they can clean the house, because the tenants, sometimes you are going to have like very dirty tenants. Sometimes I go to people's houses to do some repairs, and I see the tenants, they don't clean, they don't care, it's not their house, and then sometimes you have roaches, you have fleas, you have anything, ants, whatever in the house, and they don't care and they live like that. So that is what I'm saying. At least you can have in the contract saying, okay, every 6 months a person is going to go for at least like half inspection or full inspection, the house, to see that everything is good, because sometimes the tenant will not tell you that there is something wrong with the house until it's very late. Also, the person at least will do some type of full clean house, so that way you avoid these type of things at least once in a while. If you want to do that, otherwise you can avoid it if you don't care about that your house. Deck staining, so and cleaning. If you don't do that, you're going to have in your deck. I see this all the time. You have a deck like this, and then you're going to have, mold is going to get green, and if you don't power wash it at least once a year, it's going to get nasty very quickly. Also, you have to paint it at least every 3-4 years. Pool care, if you have a pool, so you're going to need something like that, someone who is going to take care of the pool. I mean, if you have like maybe a basic house, maybe you're not going to have a pool. Also, home, the roof repair, maintenance, or something like that, because sometimes I see, people, they don't realize they had maybe like a strong storm or or something like that, and then maybe shingle flew away, and they don't realize about that until they start having a leak, and then the tenant will complain, and then you have to repair the roof, plus the drywall and everything that is involved. So here you're going to have at least maybe like 1,000, let's say, or at least. So if you have to do like any repair or any maintenance or anything like that a year, plus you have to pay property taxes, so it might be 1%. I don't know, depending on the country that you live or the state that you live. At least here in US, you have different costs for property taxes. Also, you have to pay evictions. So once in a while, you're going to have tenants that they're not going to be able to pay, and then you're going to have issues. And if you have buildings in New York or California where the state they don't care about landlords, you will see in the news people they can live in your house for a month until you can evict them. If you Google it, also you will see here it very from a few weeks to several months. So I see news, people living in, in their house, 6 months, a year. I mean, this is crazy. It depends on the state that you are. Also, here you have some math. Let's say that, I mean, it depends, where the house is. If it's in New York, surely you will ask a lot, but at least, for instance, here where I am right now, in Ohio, Cincinnati, you will see maybe a house. You're going to be able to rent it for maybe 2,000 or 1,500 a month, and then in a year is 18,000. Or if you're asking 2,000, it will be like 24,000, and you will say, oh, okay, that is great, yes. But you will have to, deduct all the expenses. So at least if you do just the bare minimum, you're going to spend like 2,400, 3,000 easily a year. So if you see here, it depends on the size of the house. You're going to spend, here it says between 2,500 to 10,000. I would say, at least 5,000, 10,000 easily if you want to keep it like in top shape. And if you have to spend, like a major repair, let's say the AC went out, or the water heater is bad and need to be replaced, you're going to spend like 2, 3, 4,000 dollars very easily. So let's say if you have to replace the water heater, let's say easily it could be $1,600. If you have to replace or repair the air conditioning system, it could be $10,000, $20,000 easily, and you don't know, but you have to save for those events, because sooner or later you're going to have this type of issues. Plus everything that I mentioned before. I mean, this will be kind of the bare minimum that you're going to spend just to keep the house, plus again the property taxes, and you have to save for a few other things, for any repair. So here I'm going to tell you a few things, and also the houses, just in case. I mean, usually most of the houses, they are like 300,000, 150, 300, almost $1 million. I mean, most of the decent houses you're going to see for 150 or 200,000 easily. So if you want like something like that, you see, 4-bedroom, 2-bathroom, 3,000. If you want like something like very low quality, maybe sometimes you can get a mobile home or something like that, but you don't know. I don't know. Sometimes you get maybe 3-bedroom, 1-bathroom, something like that, but maybe it needs a lot of repairs and everything. So now I'm going to show you the differences if you have to invest in the stock market. I'm going to tell you how selling option works. So basically you can own the stock, and you can sell contracts, and then by selling contracts you can make a profit. So it's like basically like renting a house. So you have the house and you can rent it, so that way you can have some monthly income or weekly income, the way I'm going to show you. So that this is a very good advantage. Also, the good thing, if you are in the stock market, if you one day you say, okay, I want to move to another country, another state, you don't have to worry, okay, I have to sell all my houses, or who is going to manage all my houses and everything. You can do this from China, Argentina, Spain, anywhere in the world. You can do it very quickly, just with a few clicks, and you have to maybe watch the stock market every 2-3 days, or if you want, you can watch it every day and see how it goes, and get like a type of rent very, very quickly, and you can get more for the amount that you can pay in a house. So now I'm going to show you, so that way you know how it works. So basically, I'm going to tell you one example. Let's say that you want to buy a house, right? The house doesn't exist, but you talk with the constructor of the house, and they will say, okay, yeah, I'm going to sell you the house for $100,000. And you say, oh, it's great, a very good price. So what is the trick? The house doesn't exist yet. So he's going to make the house maybe in 6 months, in a year, and 2 years, but you don't have it yet. So that is why the price of the house is very cheap. So the constructor will say, okay, I'm going to sell you a contract, for $100,000. You say, okay, no problem. I'll give you the $100,000. I can wait 6 months, a year, until the house is built. But now that you have the contract, you pay $100,000. if you have a friend, you have a family, or anybody, and you say, hey, I just bought a house for $100,000, and the other person will say, oh, how did you get the house so cheap? And you can tell the story, but you say, you know what? I have the contract. If you want, I can sell you the contract for $150. So you made a profit, $50,000 just for selling the contract. You don't have the house, and that's it. So basically, the other person, once the house is built, instead of the worth of that house, instead of being 150, will be 200,000, let's say. So with the stock market, you can sell this. You can do the same thing. You can sell contracts. So basically, let's say the stock market, let's say ABC company, you buy the stock for $10, and you have to buy at least 100 stocks in order to be able to sell one contract. So for each $100 100 stocks that you have, you can sell another contract. So if you have, let's say, 1,000 stocks, you can sell 10 contracts. Depending on the worth of the contract, you can set the price, or you can see the price, how much it costs in the market. So that way you can sell it similar price, and you can say, okay, by selling this amount of contracts, I'm going to collect a premium. So that is, you're going to keep it in your pocket, and if the price never reaches that price, you're going to keep the stocks out, plus the premium that you collected from the contracts or the options. In this case, I have another class that I explained step by step in more detail how the options and the contract works in more detail. But here I'm going to try to explain you just the basic. At least how you're going to get the revenue by having stocks in the stock market. So that will be the basic explanation. So basically, let's say the stock ABC is $10, and then you say, okay, you have that amount of stocks, and you're going to say, okay, I'm going to sell a contract, let's say $13. So if another person is thinking, okay, the stock that you have is going to reach, let's say, $20, so he is going to be able, or he is going to agree, to buy your contract for $13. So even if the stock goes to 20, the guy is going to be paying $13. So it doesn't matter. So for him, he is going to be like a big win, because he can pocket the difference, between paying $13 and $20. So that is why people buy and sell contracts all the time. And also you can do the other way around. So let's say that you're thinking that the stock, let's say that you don't have any stock, but let's say the stock that you choose, the company ABC, is going to go from 10 to 15. And then what you can do is sell a contract saying, okay, if the stock goes to 9 or below a 9, you're going to buy it. So the other person is like insurance. If the stock goes down, he's relaxed, because he doesn't care, because he has a contract that you're going to buy the stock at 9, even if it goes to 6, 7, or 4, or $1, you're going to pay that price. So that is how you can make a profit as well. So if you're thinking, okay, the stock is going up, and you don't care, great. For all this, I would recommend you, to choose a stock that you like, that you don't mind owning, or if you have to sell it, that it doesn't matter. Or if you have to, it's kind of canceling the contract, or just buying the contract that you sold, back, because it's going against you. You can do this, and that way you can close the transaction. So now I'm going to show you how much you can make by selling contracts in the stock market. So let's say I am here, as you can see, in Robinhood, but it doesn't matter. You can choose Robinhood, TradeStation, or if you are, I don't know, in another country, and you have another broker. Basically, all of them are kind of the same. So basically here, we're going to choose, at least in this example, you can choose any other company. It doesn't matter. You don't have to choose this. The ideal will be that some company that it has a lot of volatility, so that way the premium will be more expensive. If you choose something like with little volatility, like AT&T or maybe Verizon or something like that, the premium will be lower. It's going to be less risky, but you're going to collect less premium. So I prefer to choose, at least in my case, this type of companies. Again, just make you do your due diligence, so that way you don't have any issue. So okay, let's select this. So now that we are in Riot, so at least as you can see here, we are in 1240. So let's pretend, like I showed you before, we have a house. Let's say that you have a house for 244, or let's say 200, just for the sake of argument, so that way we have a round number. So we have 200,000. So basically, we wrote here dollars. So we have we have Riot. I know this has a lot of volatility, so I like it for that. So here we have, for instance, we are going to buy in dollars. So you click buy dollars. This is if you want to sell a call. Otherwise, if you want to sell a put, you don't have to buy anything, because you are going to offer a collateral of X amount of dollars to buy X amount of stocks. But in this case, let's do it first with the call, and then call, remember, is when the stock goes up, and put is when you hang up, and is when the stock goes down. So in this case, we are going to buy the stock, and we are going to sell a call. So we are going to assume that the stock will not go more than certain price, so we can keep the premium, and we can keep doing this every week without any issue. So okay, so we have $200,000. So basically here, if you see, it will be 16,000. Just for the sake of argument, to have round numbers, we're going to say is 16,000 stocks. So we are going to remove the last two digits, because we have to divide this by 100. So we are going to have 161 contracts. So that is the amount of contract that we can sell. So basically, again, we go here. At least in my case, we have to search options. So we search options, as you can see. And then once we are here in options, we are going to sell. So sell is so the way we can sell the contract, and then we can collect a premium. And as you can see here, it says a call. So once we have the call, we are going to select the price. So basically here, I could show you, the charts and try to make it maybe a little bit more complex, but I'll try to keep it simple. So the same system will tell you, the chances of profit that you may have. So if you want to collect the most amount of premium, you have to, let's say the price is 1240. I would say maybe in a week, let's say 6 days. As you can see here, you can choose the amount of days that you want. I would recommend you a weekly, so that way it's less risky, and you can collect weekly the premium. So here we're going to say, okay, is 1240, and let's say that that you think, okay, maybe it's not going to go that fast, it's not going to reach maybe $14. So I think in 6 days we are going to be good. So as you can see here, it says chance of profit. So of course, the higher the price is, the more chances of profit you have, but the premium will be less. But if you want, 94% or 99%, you can go, even higher if you want to. But, the premium will be even lower. But if you want like 98%, I mean, this is very high, but it's going to be 6%. I mean, not 6%, 6 cents. Anyway, because you have a lot of stocks, it's going to be a nice number. So let's try 14, so that way we have 80% chance of winning. That is great. Once we do that, we select this. Again, we go here, we click continue here, and then we are going to put the amount of contracts. As you can see here, we have contracts 161. So this is the amount of premium that we are going to collect. We are going to collect 6,500. So that is a very nice number in just 6 days. There is no way that you can collect that from a house. So, and you can keep doing this week, every week, every week, every week, every week, every week for the rest of your life. And so that way, you're going to collect, it's like passive income every week, and that's it. And if you want to go even safer, again, you can go even higher if you want to. Let's say 96%. Again, we put 161. That is the amount of contract that we can sell. And if you see, it's almost $2,000 every week. I mean, that is a lot more than what you can collect from any house, or most, at least regular houses, except, I don't know, maybe if you have Beverly Hills or New York or someplace like that. But I mean, you can collect these just for the price of one house. Imagine if you have multiple houses and you do exactly the same. I'm going to show you for just in case, because I'm here, and we're going to show you some charts. I didn't want to do this, but it's going to be quick. So here we are in TradingView. Just in case if you want to, go a little bit deeper, just TradingView, as you can see here. And then you can type Riot, at least in my case. You can choose whatever company you like the most. And then we're going to select 4 hours, as you can see here. You see 4 hours. And then if you see, we can say, okay, I think because this company is related to crypto, if crypto doesn't go crazy, I think it should stay between maybe $14, and in few days maybe it's not going to reach that much. But if you want to go, let's say $16, like that, you can go $16, and you can do the math and see how much it will be. So as you can see here, I was I mean the price that I choose was $20. So if you want to go 16, let's say 1650, 16, there you go. And you think, okay, it's never going to reach that price, at least in that in 6 days. 161 contracts, again, almost $3,000 in a week. No property taxes, no tenants, no lawsuits, nobody will call you, just to unclog the toilet or anything like that. So basically, you can do this every week. That's it. Worst case scenario, you lose the contracts. The stocks. And you're going to get the payment. So if you bought the stocks for 12, you're going to get 650 if or 16 if the contract if the stock reaches that price, and the people will pay 16 plus the premium, even if the price of the stock goes 16, 18, like I mentioned before. So this is a easy way to make passive income without worrying it about about the house or anything like that. As usual, with everything there are risks for everything. If you go to the supermarket, maybe someone will hit your car, or if you rent a house, maybe the toilet gets clogged or something like that, or someone break in and you have issues. So with this, just for the price of one house, you could live like very, very well. And if you want to scale and increase in size over time, you can do it. The sky is the limit with the stock market. Hopefully you have enjoyed this class. If you want to keep learning about this, you go to the playlist and you can keep learning about the stock market. Thank you for watching. I'll see you next time.